Let me point out that the Russian central bank is now intervening in markets. It is limiting withdrawals out of banks by citizens because the Russian ruble is plummeting to a record low. Again, Russian central bank is intervening and limiting withdrawals by American citizens because of the impact on the Russian ruble. Paul, I know we're looking at an urgent situation right now in terms of the Russia invasion story, but you say 90% of this market decline is driven by the Fed.
I do, and good morning. Look, the Russian situation, like other geopolitical issues around the world for last 5, 10, 20 years, you have to go all the way back to Iraq invading Kuwait before you have a major geopolitical issue that's going to impact U.S. GDP growth or corporate earnings growth. We came into the year knowing the Fed was going to make up for their egregious mistakes since the summer of 2020, and I stand by that. I've said all along, whether or not Russia invades Ukraine, the biggest issue is market uncertainty. Markets cannot stand uncertainty, whether they're going to go a foot into Ukraine, 20 miles, 100 miles. So we're in that zone. Once, unfortunately, it's humanitarian crisis, but once the bullets began to fly, you're now in a period of a few days, a week or so before the market puts in a low. I think Mark mentioned it earlier. The S&P broke down, the NASDAQ broke down. This is kind of what you normally see. We had the January 24th low. We had a kind of a crummy, feeble, dead rat bounce up. Now we're coming down again. In the next couple days or so, markets should find a footing. I'm not saying it's going to be it could be the bottom, but if investors haven't sold already, if they haven't bought gold already, today you'll probably see a flight to quality in bonds. You know, from my seat, they're too late. The time to be smart was earlier in January, not right here into the throes of the decline. And again, this is this may be Russia, Ukraine today or tomorrow, but the Fed's got their dirty hands all over what's going on in the markets across the board, especially in technology stocks, which are clearly overowned.
Well, I guess you have to ask the question, does a Russian invasion into Ukraine change the Federal Reserve's plans? Paul, okay? We are expecting a rate hike in March, but does the reality of the moment, with oil at $100 a barrel, with an economy slowing down, with inflation at 40-year highs, and now an added element of war in Europe, does that change the Fed's perspective and the moves that we're expecting in March?
Just Russia invading Ukraine does nothing to Jay Powell and his friends. Absolutely nothing. The question is going to be, is the market going to push him? Will the stock market decline sufficiently enough? Will the credit market seize up enough to have them pause? Given the rhetoric and the Bullard comments and Brainerd, et cetera, and Mester, my sense is they're going to go full steam ahead in March. And frankly, that may be the point in early to mid-March where stocks spot. That's the point from which the bottom we go up from versus stop going down into. That could be the catalyst, if you will, where all the uncertainty goes away. The Russia-Ukraine thing, again, it's sad on a humanitarian basis, but it's, look, we're talking about oil. The average American spends roughly 7% of their disposable income on energy. This is not going to tip the economy into recession. I came into 2022 looking for lower growth, lower corporate earnings, but not recession. It's going to go back to the Obama era growth in the country.
Yeah, a lot of pressure coming at this economy between higher oil, a slowing economy, growth numbers, and of course we're going to get the GDP out today. We will bring you that GDP. That was the second estimate for the fourth quarter. So we'll bring that to you coming up in about an hour's time. Alan McCartney, Paul Schatz, thanks very much. Great to get your insights this morning. And Mark Tepper, you're with us all morning long, and we are grateful for that. Ukraine has declared martial law.